Assalamualaikum warahmatullahi wabarakatuh. The purpose of this report is to compare Aeon and Air Asia Company. Aeon operates in the retail sector, focusing on consumer goods and service, while Air Asia operates in the aviation industry. It is highly sensitive with economic condition, fuel costs, and travel demand. The key issue is the difference between Aeon steady performance and Air Asia more unstable performance, which is shaped by its recovery after major industry disruption. For the performance analysis, Aeon shows a steady financial performance and consistent profitability. Air Asia records strong revenue recovery driven by increased passenger demand but faces higher operational costs. In conclusion, Aeon demonstrates a strong financial stability and lower risk due to its defensive business model, while Air Asia higher growth potential accompanied by higher operational costs and financial risk. The introduction of the company, Aeon is founded in 1758, a leading multinational retail group and one of the largest retailers in Asia. It headquarters in Chiba, Japan. Later, the company rebranded it from Jasco to Aeon in 2001. Air Asia is founded in 1993 and it struggled financially in its early years. It was a low-cost airline based in Malaysia. Tony Fernandez bought it and changed it to a low-cost carrier in 2001. The slogan "Now Everyone Can Fly" it reflects missions, means to make airline accessible to more people.
Capital structure is the mix of security and financing source used by corporation in real-world investment. There are one famous theory, Modigliani and Miller, 1958. The theory demonstrates that decision between debt and equity has no applicable impact on the firm's worth or the price. In capital structure, there are two focus ratios, which are debt ratio and gearing ratio. Debt ratio are used to know how much of company is financed by debt and whether they can handle the debt safely or not, while gearing ratio are used to know how much the company relies on owners' fund or how much debt is used compared to equity. Here are the calculations on debt ratio for both company Aeon Berhad and Air Asia Berhad. As we can see, Aeon maintains a low and stable debt level and they show a good financial stability, while in Air Asia Berhad, their debt ratio are high. However, they show an improvement on gradually decreasing in order for stable financial. Next, gearing ratios. For Aeon Berhad, their gearing ratios are stable and moderate throughout the 3 years. Therefore, there are no major financial distress signals. For Air Asia Berhad, in 2022, they had faced the worst financial risk where they get a negative figure for gearing ratio. However, started from 2023, they had made an improvement in order to meet financial stability. From the research and analysis that we have done, there are a few reasons and circumstances on why Air Asia Berhad had met the worst financial risk on 2022. Firstly, pandemic COVID-19 be the one of the reason in the scope of company performance. Pandemic COVID-19 happened on early 2020 until end of 2021. From that, many airline business had affected due to the lockdown that enforced worldwide. Because of that, Air Asia were affected where their parent company, Capital A Berhad, had classified as a financially distressed under Practice 17, PN 17 by Bursa Malaysia. From that, they were required to make a recovery that may be cost a large amount. However, Air Asia do make an improvement from year to year even though they are struggling to recover from their financial situation. For Aeon Berhad, pandemic COVID-19 also made a big impact to them. They are facing slightly fluctuation in gearing and debt ratio. However, the company maintains stable and they know how to control the situation. In the scope of media coverage for future prospects, Asia's revenue had achieved a positive earning before interest, taxes, depreciation and amortization (EBITDA) because of high demand for travel. Lastly, for Aeon Berhad, they also show a strong revenue and profit in any aspect, especially their retail demand.
Dividend policy shows the financial strategy of a company by determining how much, and when the company pays dividends to its shareholders. Dividend can determine the financial health of a company, which can attract the attention or interest of outside investors. Based on Modigliani and Miller's theory of dividend irrelevance, it states that the form of dividend payment does not affect the value of a stock. In principle, no shareholder will be richer or poorer if the company pays a high dividend or retain profit for the future investment. Aeon's dividend per share increased from 3 cents to 3.99 cents and then 4.01 cents, showing that the company is gradually increasing the amounts of dividends received by shareholders each year. For Aeon BHT, the dividend payout ratio from 2022 to 2024 is not too high and not too low, which is around 49% to 51%. This result shows that the company distributes half of its income to shareholders and the rest they retain for reinvestment and company growth. Aeon BHT experienced an increase in dividends in 2022 and decrease in 2023 from 33.33% to 0%. In 2024, the dividend growth rate increasing positively to 12.5%, and it showed that the company's good financial performance and offer long-term potential to investors. AirAsia doesn't pay cash dividends for the period 2022 to 2024. This is closely related to the company's situation, which is still in the recovery phase after the COVID-19 pandemic. The aviation industry has been severely affected by the movement restrictions announced by the governments. This has caused AirAsia to record losses and face high financial pressure. Meanwhile, AirAsia has chosen to retain profit and distribute part of them as equity. This strategy aims to ensure that AirAsia can survive and support growth for the long term. Now, let's look at company performance. The share price for Aeon BHT at the beginning of 2026 was approximately RM1.24, and the share price moved within the range of RM1 to RM1.55 over the last 52 weeks. This shows that the share price has gone up and down, but is not too volatile compared to the overall market. In early 2025, AirAsia share fell to a low of around 0.825 cents after a disappointing financial report in 2024. These situations shows that AirAsia share price was unstable and more easily affected by news or financial report.
I will continue the presentation about weighted average cost of capital, or WACC. WACC is the minimum return required by a company's debt and equity holders. It is used as a benchmark to evaluate investment performance and compare companies with different risks and capital structures. WACC is important because it acts as a hurdle rate. Investments that generate returns above WACC create value, while those below WACC destroy value. WACC is also used as a discount rate in valuation, where a lower WACC increases firm value. Additionally, WACC serves as a risk indicator, with higher WACC reflecting higher financial risk. This is the calculation and result of WACC for Aeon Berhad. It shows that Aeon has a stable and low WACC of around 3.6% to 3.8%, supported by steady cash flows and a low beta of 0.08. And this is the calculation and result of WACC for AirAsia Berhad. In contrast with Aeon, AirAsia's WACC is more volatile, peaking at 73.76% in 2022 due to high finance costs and negative equity, before stabilizing in later years. But it still remains higher than Aeon's due to industry risk and high leverage. Lastly is for analysis. Aeon's share price traded above its 50-day moving average of RM1.15, showing market confidence and low risk. In contrast, AirAsia's share price is exceeded its 50-day moving average, which more volatile, reflecting investor concern due to PN17 status. While for media coverage and future prospects, Aeon's Visit Malaysia 2026 strategy supports steady long-term growth and a low WACC that is suitable for cautious investors, while AirAsia's introduced more than 30 new routes offers high growth potential, but with higher risk due to industry volatility and debt reliance. That's all for my part, so I pass to the next presenter.
To conclude this analysis, we can see that both Aeon and AirAsia shows a very different financial performance. According to our findings, Aeon's final WACC is 3.79%, while AirAsia's final WACC is 6.17%. It is actually a huge difference that shows AirAsia costs much higher to fund compared to Aeon. In terms of dividend yield, Aeon's dividend yield is at 3.23%. Meanwhile, AirAsia, on the other hand, haven't out any dividend as their profits are being held to aid in restructuring and recovery of their company. So, we have come to a conclusion that Aeon is a much better company to invest in for Halfway PLC, as being backed by our findings. The proof is Aeon is better. The fact is Aeon is better positioned financially as well as less vulnerable to risk. Let's not forget that Aeon also offers a higher possibility and more instant return in dividend, which is one of the most important factors to consider for making an investment. That's all from our group. Thank you for lending your ears and time.